Good morning. Steve Free in Chicago with the morning grain comments. Hope everybody had a safe and nice weekend. There's four things that the markets in the grain room has been trading over the last few weeks. Number one is the recession. Number two is weather. Number three is Ukraine. And number four is China. In all those markets right now, those fundamentals are a little negative this morning. We did open a little bit higher overnight, but I saw some selling come in across the board. I think in the bean market, we reached a price level at around $15 that really didn't justify what we're seeing as far as demand is concerned. And we also have one map, the European ensemble, that has mostly normal weather conditions over the next 2 weeks across much of the Midwest, especially in the north and in the east. We also note that this morning we've got some rains in central Illinois that will move into parts of already wet Kentucky. We also are concerned on the bean market about China's demand. They continue to be a slow buyer of U.S. soybeans, and I think there's some concern that maybe our export demand might fall a little bit from USDA's guess. On the other hand, this new potential fuel green bill could add to soybean oil demand, which could increase the 22-23 crush. So then we're down to what's the most important thing is the final soybean yield and whether or not the carryout stays at 280 million bushels or actually declines. Over in the corn, we saw the first shipment out of Odessa of 26,000 tons of corn destined for Lebanon. We also saw that there was some bombings in a port city which killed the owner of the biggest Ukraine ag company and his wife. And we'll just kind of see how that impacts future shipments. But also in the corn market, you're seeing Brazil continue to export corn to buyers. But I think eventually, when they run out, the U.S. will be the main shipper of corn to most countries except maybe China. And that could raise our corn export number 200 million bushels. And then it comes down to whether our yield is 177 or something below that. So I think that the soybean and corn market will be tight. The other thing, I guess, is that money flow. Funds continue to liquidate out of their long positions in the grain room. They have the smallest position right now of the year, and they refuse to come in and buy the grains, even though some people think the market's near a bottom or cheap, because of the weather volatility, the recession volatility, and all the factors that keeps the commodity prices low. This despite a lower dollar. We would expect the funds might look at the market around the September crop report or the harvest lows going into the winter months and before the next South American harvest. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.